Welcome to the First Home Buyer's Guide for 2025. In this video, we'll help you understand stamp duty, lender's mortgage insurance, and the latest government support options available right here in New South Wales. Let's start with the essentials. When buying your first home, there are two major costs to be aware of. Stamp duty, which is a state or territory government tax. Secondly, lender's mortgage insurance or LMI that may be applicable if the loan relative to the property price reaches a certain percentage. Lastly, we will cover the government support schemes that can help you reduce the entry cost. Transfer duty, also commonly known as stamp duty, is a tax charged by a state and territory government when property ownership changes hands. Now, this applies to residential homes, investment properties, vacant land, and even some business transactions that include land. Stamp duty is calculated based on a number of key factors. It includes the contract date, the property type, the purchase price, or the market value, whichever is the higher. In New South Wales, you can estimate the duty using the Revenue New South Wales calculator, which is available online. A link to the calculator has been inserted in the description box below. So when do you pay stamp duty? It is generally due within 3 months of signing the contract, but if settlement occurs sooner, it's due on the settlement date. But for off-the-plan purchases, you may defer the payment for up to 12 months if you intend to live in the property. As part of purchasing a property, there is a conveyancing process involved. Now, this is best to seek advice from a solicitor or a conveyancer that will look after the payment and ensure that all deadlines are being met. Your mortgage broker is really the first point of contact because throughout the process, they will help you estimate the duty up front, as well as making sure that it's all included in your borrowing plan. Next up is lender's mortgage insurance, or known as LMI. Now, what is LMI? It's basically an insurance policy that protects the lender if you, the borrower, is unable to repay the loan. It is generally required when your deposit of the purchase price is less than 20%. Now, this is important. While it protects the lender, you, the borrower, are the one who pays for it. So even though LMI is not a borrower insurance, instead it has been developed and designed to allow borrowers with a lower deposit to still be considered to borrow the home loan to purchase the property. But obviously this comes at a cost. Again, it protects the lender if the property is sold at a loss, where the lender will then make a claim of the difference what is owed from the insurer directly. Now, the insurer in that event may even seek repayments from you as the borrower for the shortfall. So it is important that you understand this point. How does LMI work? LMI applies on high LVR loans, especially those with deposits under 20%. Now what happens is, again, the lender transfers the risk to the insurer and the premium can either be paid upfront or added to your loan. LMI allows buyers to enter the market sooner by reducing the deposit hurdle. It does help buyers to take advantage of opportunities without waiting years to save a 20% deposit. But remember, it also increases the total cost of your loan over time. So how much is LMI? LMI is a one-time premium which is paid at the loan settlement. It covers the lender for the full term, and you can either pay it upfront or even add it to the loan, which is also called capitalization. The cost depends on your loan size and the loan-to-value ratio, not so much your personal credit risk. In saying that, there are some lenders who do price the home loan interest rates based on the borrower's credit history, but those lenders are not participating lenders of the federal government schemes. As mentioned earlier, if in the unfortunate event you default on your loan, the lender may sell the property. If the sale doesn't cover the loan, the lender will then claim the shortfall from the insurer, and then the insurer may seek reimbursement from you. Now that we have covered stamp duty and LMI, let's look at the support programs which are available to first home buyers. The two key government schemes that will help first home buyers save are the First Home Buyers Assistance Scheme and the First Home Guarantee. The First Home Buyers Assistance Scheme provides stamp duty relief for eligible first home buyers. For homes valued up to $800,000, you may receive a full exemption. Now, if the property price is between $800,000 and $1 million, the stamp duty payment is paid at a concessional rate. For the vacant land, it has its own threshold, where the stamp duty exemption is allowable up to $350,000, and for any land values between $350,000 and $450,000, stamp duty is paid at a concessional rate. To qualify, the borrower must be buying in New South Wales. They have to be purchasing within the price caps. They also need to own 100% of the property. They have to be over the age of 18 as an individual, and as well as be a first home buyer. They can either be an Australian citizen or a permanent resident, and they need to live in the property for at least 12 months. Alright, and next up, it's the first home guarantee. Now, this scheme allows you to buy with just a 5% deposit and not have to pay lender's mortgage insurance. Now, this is a federal government-backed scheme, and it has 35,000 spots in total available for the 2024 and 25 financial year. So how does the first home guarantee work? Essentially, Housing Australia guarantees up to 15% of the property's value. Now, what this means is that the lender can offer you a high LVR loan without you, the borrower, having to pay LMI. So, for example, on a $500,000 property where the borrower has $25,000 as a deposit, you will need to borrow $475,000, which is a 95% loan to value ratio. Now, ordinarily, because the LVR is over 80%, the borrower would have to pay lender's mortgage insurance. But in this example, because the borrower is covered under the first home guarantee, they will essentially save in having to pay over $16,000 in LMI. Now, the basic eligibility criteria are that you have to either be an individual or a joint applicant. You need to be over the age of 18 and either be an Australian citizen or a permanent resident. If you apply as an individual, your taxable income has to be less than $125,000 per year, whereas for joint applicants, it is $200,000 per year. You also have to be a first home buyer and you haven't owned a home in the past 10 years. Regarding the deposit, you must have saved at least 5% of the purchase price, but no more than 20%. It's also important to note that each lender has its own criteria when they assess your savings history. So a mortgage broker will guide you through what is acceptable and what is not. The first home guarantee does apply to a range of properties. For example, you can buy an existing home, a house and land package, or an off-the-plan purchase. Now, if you're buying a vacant land, you must enter a building contract within 6 months of settlement. Although the scheme allows a first home buyer to use a 5% deposit and avoid LMI, the amount that they borrow still needs to meet the lender's serviceability assessment criteria. To verify the borrower's income, they will need to provide a notice of assessment from the Australian Taxation Office. And for any applications after the 1st of July 2024 and before the 30th of June 2025, you will need to provide the 2024 financial year notice of assessment. Once a spot in the scheme has been reserved, the borrower has up to 90 days to obtain the notice of assessment before a guarantee certificate can be issued. Alright, so to apply for the first home guarantee, first speak with a mortgage broker who will help determine your borrowing capacity by assessing your financial situation, as well as checking your eligibility for the schemes. Now, first-home buyers should also review the interest rate risk as well as market conditions. It is also highly recommended that you see professional legal advice and then proceed to apply through a participating lender or a mortgage broker. Alright, and thanks for watching. You can find all the links to the schemes in the description box below. But if there's anything that you're unsure about, feel free to either leave a message or feel free to contact me directly. Lastly, if you found this helpful, please like, subscribe, and share. Thanks, and I'll see you next time.